right, good afternoon, VV Nation. Hello, everybody. Good to be here. My name is Glenn Tompkins. Welcome to our YouTube channel and welcome to Trending Thursday. So guess what? Today we're going to start off. We got a soundboard. Thanks to my producer, Joey. Say hi, Joey.
Hi, Joey.
Joey got me some sounds that I can use. So I'm going to start off and I'm going to see, can you hear this? I want to just type in the room if you can hear that or not. I can't see if it bounces or not. All right, let me know if you can hear that or not. All right, and if you could, that was, hold on, nobody said that they could hear that. Let me do it again. But you can hear that. All right, so you know, that's because of you. I got a whole soundboard now, and I got some stuff that I'm going to start using. That's to say thank you, folks, for supporting the channel. One, thank you for being here. Two, this is Trending Thursday on YouTube. I know we picked up a lot of new people, especially because of the Financial Freedom Summit. Thank you, all the new folks that are here. If you haven't already, please subscribe to the YouTube page. If you haven't already, please look below this video. Subscribe to the YouTube page. If your subscribe button is red, that means you need to subscribe. If your subscribe button is gray, don't click on it. That means you've already subscribed. All right, so thank you for supporting the channel. We have grown leaps and bounds, and that is because of you guys. That just tells me that you like the content. I'm going to keep the content going. So again, show the support for the channel. With that all being said, again, my name is Glenn Tompkins. I'm a senior instructor here at VectorVest. I've been here for 16 years, and everything I've learned about the market, I've learned by way of VectorVest. All right, so with that being said, I am not an expert. I am not a guru. My job here is to talk about stocks that are making the news. I'm not about giving you the stocks that are the next hottest stock and on it. No, that's not what I do, and that's not what the VectorVest software does. For those of you who are here, we do use a program called VectorVest. Well, you're on the VectorVest YouTube page, and if you don't have a subscription to the software, Joey's going to type a link in the room to give you access to a trial. We still have a special. We're still running that special. Yep. 99 cents for 30 days. 99 cents for 30 days. So if you like what you see here, one, subscribe to the page. Two, you might want to think about taking out a 30-day subscription for 99 cents. You can't beat that anywhere. All right, first thing we always talk about when we get started is what's going on in the market. All right, why? Because market's direction is the most important thing. Is the market going up? Is it going down? Is it going sideways? Are we coming off a bottom? Are we coming off a top? Knowing where you are in the cycle of the market is important to know what kind of trades to put on. For instance, if the market were topping, that's a good time to protect your profits on the stocks that you own. If the market is bottoming, well, you're probably already bearish in the market, but if the market is bottoming, that's a good time to start becoming bullish. All right, and when the market's trending, excuse me, whether it's up or down, you learn to play the stocks that take advantage of the trend up or to the trend down. So knowing where you are in the market is the most important key. That's why we always start off our segments with market timing. Let me open up the home page to the VectorVest software. For those of you who are not subscribers to the software, this is what the home page looks like. And from this home page, before you even dive into the software, this home page gives you a plethora of information. And no, that is not a Glennism. That's a real word. So it gives you an abundance of information to get you on the right side of the market so that whether you're trading bullish or whether you're trading bearish, you get an idea of how to manage the stocks that you're currently in. Let's start off with what the indices are doing today. All of the major indices are up nicely today. The Dow is up 0.6%. The biggest mover is the NASDAQ, up almost 1%. The S&P is up about 0.9, almost 1%. And our VectorVest composite is up 0.6%. So for those of you who are new, what is the VectorVest composite? The VectorVest composite is an indexed arithmetic average of all of the stocks that we track. So what does that really mean? Well, when the market is up, we say when the Dow is up, we say the market's up. The Dow tracks 30 stocks, albeit some of the best stocks that are in the market. When the NASDAQ is up, we say the market is up. Now, the NASDAQ tracks about 4,300 stocks altogether. but it's very tech heavy. So the stocks like Google and Apple and Amazon are located in the NASDAQ, and Apple in and of itself can move the NASDAQ because it's that big of a stock. So yes, it tracks more stocks, but it's very weighted more so to the tech side. Now, what people use as a benchmark to see if their portfolios are doing well or not is the S&P 500. Well, just by its name, you know that it tracks 500 stocks and some of the best stocks out there. So 500 stocks or 4,300 stocks, which were more tech weighted, or 30 stocks. When we look at the VectorVest composite, and when I say it's an indexed arithmetic average of all of the stocks that we track, currently we're tracking 8,181 stocks. So when you look at the price of the VectorVest composite right now at $45.83, we're saying that the average of over 8,100 stocks is trading at a price of $45.83. Now, we track that price on both a day-over-day and a week-over-week basis because we feel that it is a better representation of the broad market movement, and that's why we use it for market timing. Those of you who are new, well, you may not believe in market timing. Well, VectorVest has been around for over 30 years. We time the market. Now, there's a difference in prognosticating where the market is going to go and keeping you on the right side of the trend of the market. At VectorVest, we are trend followers, and we keep our subscribers on the right side of the trend at all times. So you'll never be blindsided managing the stocks in your portfolio. We always let you know when the market is looking toppy, when the market is getting to a bottom, when the market is starting to stall out. We have indicators within the VectorVest software which will get you prepared, and with that preparedness, you can manage the trades that you're currently tracking to make sure you capture profits at the right time, and also to make sure that you don't give up too much to the downside. And that's key, knowing when to sell. But our mantra is to have you in safe, undervalued stocks that are rising in price in a rising market. So how do you do that? Well, you need to know when to buy, you need to know what to buy, and you need to know when to sell. And everything we encompass in the VectorVest software will put you on a path to know how to do these things. And knowing when to buy, what to buy, and when to sell is a trading plan. Always remember, plan your trades, trade your plan. So with that being said, that's a good golf swing. Get up and you go. All right, so trading your plan is like a good mechanical golf swing. Would you agree, Joey? Mm-hmm. So you heard that swing? That was probably my 7-iron taking me about 160 yards. But that's because I know the mechanics. Not in the woods. Don't be a hater. Did somebody type that or did you say that?
I said that.
You a hater. Anyway, so that was a good 7-iron, about 160 yards out. About 160 yards out. But that's because you have a plan. You have the wherewithal to have the mechanics behind the swing. Same thing, you need to have the mechanics behind your trading. Keep that in mind. I'm going to hit that again. I like that golf swing. Good 7-iron. I'm probably got to go golfing this weekend. All right, so knowing that all of the major indices are up, let's go look at our daily traffic light into the market. One tick into the green. Our market timing gauge says VectorVest does advocate buying safe undervalued stocks that are rising in price at this time. We give you guidance every single night. So again, you should never be blindsided. Down below the market timing gauge, we have the color guard. The color guard represents the movement of the price of the VectorVest composite, the RT, which is the relative timing or short-term price trend of the market, and the BSR or buy to sell ratio, which looks at the overall health of the market. We get these lights depending on these indicators moving on both a day-over-day and week-over-week basis. If they rise on a day-over-day and a week-over-week basis, we assign a green tile. If they rise and the data is mixed, like in this case, up on a week-over-week basis, but unchanged on a day-over-day basis, we give a yellow light. The buy-to-sell ratio is higher on a week-over-week basis, but now going lower on a day-over-day basis, so we assign a yellow light. So the green lights are good, strong days. The yellow lights mean it's okay. And just like you get to a yellow light, what do? You slow down. But I've got a lot more green in my color guard than yellow. We are more bullish in the market. So let's talk about why the market is the way it is. Markets move because of three things. Three things move markets globally: earnings, interest, and inflation. I don't care what anybody tells you about anything. These are the three things that move markets globally. When earnings are up, you have a bullish market. There's no ifs, ands, or buts about it. Companies are still beating out earnings even though COVID-19 is in play. A lot of companies are still meeting earnings. The time to really look at earnings is going to be in the next quarter, because then the first quarter is going to be taken into consideration. I believe third quarter this year is going to be very important from the aspect of looking at earnings for companies, because now you're going to start to see the full effect of the pandemic on a lot of different companies. Other two things that move markets: interest and inflation. All right. Interest rates are still at historic lows. We're still between 0.25 basis points on interest. Historically low. What does that mean? When I borrow money, I pay it back at a much lower interest rates. This gives me more fuel to want to go out and borrow money at a lower interest rates, because now when I pay it back, I don't have to pay back nearly as much. And inflation. Well, inflation is rising prices. And right now, the inflation rate is still within the number that the Fed is looking for. Now, talking about the Fed's job is to look at the economy, right? There is a difference between the economy and the market. And because of the pandemic, the market and the economy actually became conjoined, because the market affected the economy, which affected the market, and back and forth. Usually they are two separate entities, but right now, because of the pandemic, they are kind of together. So the Fed's job is to make sure that employment is where it needs to be, that people are employed, and they want to make sure that interest rates are low. Well, the second part of it is already in play. Lower interest rates usually lead to a robust economy. All right. But because we know what happened with the pandemic and the country and the world getting shut down, that affected jobs. All right. So the jobs are still high. A lot of people unemployed, but the number of unemployed or people filing for unemployment are decreasing. All right. But there's a lot of people on unemployment. And another thing about the Fed has opened up all of the spigots to be able to try to buoy the economy and keep the economy the strongest, and it still is right now the strongest in the world. Everybody's going through some sort of a recessionary feel because of the pandemic, but you're going to notice that our market is already starting to resume its upward trend, and we're going to talk about the news that's affecting it. So that's just a nice overview of what's going on in the market, but let's see what news is affecting the market. We'll start off with our first story. U.S. economy contracted 5%. Oh, there we go. U.S. economy contracted 5% in the first quarter as coronavirus hit. So we already know that because of the pandemic, the economy is contracting. A lot of people are pulling back. A lot of companies are going out of business or are on the field of going out of business. So the pandemic has definitely affected companies. But the companies that have the money are the ones that are weathering the storm. A lot of the mom and pop stores, though, are going out of business. But what did the Fed do? The Fed put through, and our government put through stimulus to help for small business loans. All right. So a lot of these companies that were hurting, a lot of them were able to borrow money. A lot of the mom and pop stores were able to borrow money to keep them afloat during all of this time. But slowly but surely, the world is reopening again, and we'll see how that fares out. But the economy has contracted. Let's go to my next one. So the Fed's job again. Easing unemployment claims show slower pace of coronavirus-related layoffs. That's huge. So, and you match that up with the stimulus for these smaller businesses. I think that it's going to play out very well. A lot of these companies that were able to borrow money to keep themselves afloat, as the market and the economy starts growing, opening back up, these companies, you know something, I'm thinking that a lot of people are itching to get back out. Now, there's going to be a lot of people who are going to be very proactive. They may still wear masks and things of that nature to protect themselves, and that's fine. And you take it as it comes, but I think more so, we are not designed as an economy to sit at home, all right? Now, listen, two things that I don't talk about in here is politics and religion, all right? I'm not going to get behind the politics behind it. All I'm saying is that our economy is not set up to a point where we can stay closed forever. And I think that going back out into the world as the world starts to reopening, do it consciously, do it safely, whatever needs to be done, I think that needs to be done. So just keep that in mind. All right, but unemployment is starting to get, a lot less people are filing for unemployment. I think that's a positive bullish sign. And one more thing, Fed's William, economy good words here, may be bottoming as Fed weighs yield curve control. So a lot of things are pointing to the direction, with the exception of the contraction of the market contracting. I think that was out there. I think that was baked in, that we knew that the market would shrivel, or that the economy would shrivel because of the pandemic. But I'm liking the idea that the economy may be bottoming. And if that's the case, this may be a great buying opportunity to get back into the market if you haven't already. And I think by way of the VectorVest software, we've done a great job of pointing you in the direction of, as the market was bottoming, just like as the world turns, as the market was bottoming, we were getting our subscribers back into the market piecemeal. And if you're not a subscriber and you haven't gotten that information, again, Joey's going to type it in again. We're offering a trial to the software, 99 cents for 30 days. So those are the three things that I have as far as what's going on in the market. If you read the little sub part of this, the Federal Reserve Bank of New York president sees space for a good rebound. All right, so now let's get into the software. Let's get back into the software, and I'm going to go to the graphs tab. I don't know if I wanted to do it that way. Nope, I don't want to do it that way. Let's go to the watch list viewer. Let's go take a look at the stocks for this week, 5/28. And two stocks that we use to track what's going on in the market are the spiders. Look at that. The spiders, the S&P 500, and the VectorVest composite. Now, we're looking at 12 stocks altogether in my stories today, right? Notice that the spiders has the best combination of value, safety, and timing in the list. That's a good sign for the market. The SPY, or the S&P 500 ETF, is rocking and rolling right now with a VST of 1.28. VST looks at the combination of relative value, relative safety, and relative timing into one master indicator. And we're going to use these indicators as we go through to analyze stocks. And the other stock we have is the VVC. Let's open these up. We're going to right click. Let's take a look at these two graphs. All right, let's put this on a 3-month graph. Now, people always ask me, why do you look at a 3-month graph? Well, what happens every 3 months on the stock or in the market? We get earnings. I always want to make sure that any graph that I'm looking at does include earnings play, whether it's on the stock or in the market. We have here a 20-day exponential moving average. Why am I using that? That's a good way of knowing from a swing trade perspective what's going on. Notice that the S&P 500 is above our 20-day exponential moving average. Here's RT, or relative timing, the short-term price trend of the S&P 500 rocking and rolling. This tells me that the spiders, or the S&P 500, is in an uptrend. The higher above the value of 1 it is, the more deeper in an uptrend it is. Love the idea. Look at the open candle today. Very little wick at the top of the candle. Market's moving. Love it. Good time to be in the market. Let's go look at our VectorVest composite. Same kind of scenario. I'm going to take off the earnings per share real quick. Here's the RT. The short-term trend in the market is still moving up by way of the VectorVest composite. Above the 20-day exponential moving average. Broke through a couple of levels of resistance right here shown on the graph. Moving higher. Love it. This is a good time right now to be in the market. On the homepage of the VectorVest software, we saw that VectorVest does advocate buying safe, undervalued stocks that are rising in price at this time. So that's where we stand. We looked at what was going on in the market, and now we see the results of how it's affecting the market, and currently in an uptrend right now. All right, Joey, any questions?
No, sir.
No questions. Excellent. So I'm going to close out of the graph. All right, so that is our first story, all about the market. Now you have, whether you're with us a long time or not, not a subscriber of ours, that is a nice overview of what's going on in the market. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.